It's a trend that actually very few people are aware of, but that is very concerning. And the trend is that democracy has been receding in the world for the last 20 years. It's well established at the academic level. In fact, academics say that the world is back to the democracy and freedom levels of the mid-1980s. So it's a long-term trend. It's very concerning, and it's bad, obviously, for the world, but it's also bad for investors. Why? Because autocracy is actually bad for business. In the academic world, Daron Acemoglu, who won the last Nobel Prize in Economy, has been able to show that democracy causes economic growth. He can show that in the last few decades, every single time a country went from autocracy to democracy, every single time the GDP per capita rose. And every time a country went in the other direction, it deteriorated the GDP per capita. And what my firm Tobam has done is essentially showing that what's true at the macroeconomic level is also true at the stock level. Autocracy is bad for the economy, but it's also bad for investors. So we have done years of quantitative research looking at the academic results and at all of these factors, and we came up with 4 main conclusions. One, we're able to show that hiding in the market, there is something that we call the autocracy risk factor. It's a factor that we believe nobody else is looking at, and yet is becoming more and more important in today's markets. The second conclusion is that this risk factor is actually negatively rewarded, meaning that every time you expose your portfolio to this risk factor, it will deteriorate your long-term performance. The third conclusion is that this risk factor is independent from other well-known risk factors in the market. Why is that important? Because it means that you can build a portfolio that's minimally exposed to autocracy without taking on other biases in your portfolio. And the fourth conclusion, probably the most important one, is that most of your exposure to this risk factor is indirect. What does that mean? It means that you don't need to own Chinese stocks to be exposed to China, for example. If you own Volkswagen, a German company, Volkswagen has a lot of business and factories in China. Through your Volkswagen stock, you're very exposed to China. So the Liberty portfolio that Tobam builds try to really minimize this indirect exposure. We believe it was a winning strategy over the last 20 years that were years of mostly happy globalization. We believe that in today's world, which is much more fractured, much more prone to conflict, the exposure to autocracy will become more and more relevant, and we believe that long-term investors who want to be resilient in this environment will have to look at the autocracy risk factor.